Hey YouTube, this is Antonio the 13th here, back with my November update for the investment portfolio here. And as you can see, I am up to $30,339 as of the current moment. And over the past month in unrealized gains, I am up $696 or 2%. So I think this is pretty good given that a lot of people right now, given what the market has done, are either down or, kind of sideways. So I'm glad to have this month be the way it is. But let's go over what I've done and then what I'm going to do or what I plan to do for December. So let's just go to my spreadsheet here where I track all this. So as you can see here, I started the month off with a call credit spread on Ford. Let me just open up the chart on that real quick so I can kind of explain the rationale for which I entered this trade. So if I zoom out here, you can see that Ford has been going down in this channel, and it's respected both bounds of the channel pretty well until this last earnings in November that Ford had. And so leading into that, we were getting right up to that channel line, and I'm already not very bullish on Ford as it is, so I figured, well, might as well, enter some sort of bearish position on this, so I decided with the call credit spread. So I entered the call credit spread at the I think it was the 1350 strike, and yeah, basically on earnings day, um, I entered that spread. I got into it about when it was still under the trend line here, and then later on that same day, it started going above that trend line a bit. So yeah, I'm glad that I was able to maintain discipline and wait and see, okay, is the trend line going to be respected here or is it going to be broken? And so I remained patient, and you can see that we kind of went a little sideways on Ford, but when we went down about here, I think I hit 50%, and that was good enough for me, and I sold and took that 50% gain on that. Yeah, I ended up making 54% on that call credit spread. I did a couple other small call credit spreads, as you can see. I was trying to really reduce the amount of trading that I was doing this month. I'll go into more about why that is here in a bit. But yeah, as you can see, those were at least successful. And then the rest of the month was basically just, I mean, other than these two very small zero DTE trades that I did, it was just premium collection on my USO position, as well as I ended up doing a covered call on Coke because that has been rallying a bit. And I ended up getting my first dividend from Smithfield, so that was good. So yeah, that's really it. That's all I did in November. The biggest amount of money that I made was from the covered call premiums on USO and the forward call credit spread. So right now, my portfolio allocation is it's very heavy. Like there's not much cash, as you can see here. My biggest position easily is USO, with almost half of my account taken with that. I'm going to be adjusting that, but more on that in the what I'm doing this next month section of the video. I also entered a few new positions. I bought some Bitcoin. Bitcoin has been going down, as I'm sure you're well aware, and I figured I would just buy the dip with just, $100. So when it was around 80,000 something, I bought like $100. So I'm up a little bit, but I'm sure Bitcoin doesn't seem very bullish right now. So I wouldn't be surprised to see it going down further. So if it continues going down, I'll continue buying little bits of Bitcoin and averaging down. I'm sure it'll come back one day. And then also another new position that I didn't really talk about in the previous video was Clover Health, ticker CLOV. Again, another small speculative position that I took. Um, this is basically a company that is trying to integrate AI into healthcare, uh, insurance specifically, to try and introduce some savings on the administrative costs that are associated with health insurance, which kind of makes that a little more expensive, or it is definitely a contributing factor as to why health insurance is and healthcare costs generally are expensive. So I I like the idea of that generally. It's highly speculative though, obviously, so I'm only putting a very small amount of portfolio in it. Not even 1% at this point. If it averages down, or if it comes down below $2 a share, I will probably sell another put and average down on this. But right now, I'm good with the position size as it is and where the stock is at. And yeah, so let's go to one last thing here before I move on is this monthly performance chart here that I made. So I think this kind of illustrates well where my portfolio has been succeeding and where it's been fading or failing. And as you can see on the options trades here, when I've been losing money in the account, it has been primarily because of that. So I've defined options trades here as anytime I'm doing my zero DTE trades or call or put credit spreads or debit spreads or anything like that. Anything that isn't just selling a cash secured put or a covered call. So that is why I decided to go a little less heavy on the spread trading this last month and be a little bit more purposeful about it when I did do it. And I think that yielded some positive results, obviously. So we'll see if I can keep that up over the next few months. But yeah, so let's go into what I'm doing for for December. So back in Robinhood here. So on USO, if you recall from the last video, if you watched the last one, I have my 200 shares, of course, but I also had two puts that were deep in the money. And if you recall, the goal of this was to ensure that if the stock went down, if USO went down, I would be capturing the downside with the puts. And if the stock went up, then I would be capturing the upside with the shares, obviously. And so my USO position would basically be kind of flat. And so I would then just sell covered calls way out of the money to basically collect the premium without any downside, but with also any upside on the shares. So I ended up tweaking this a bit. I sold the puts in the middle of the month. Let me just open up the chart here. I ended up selling the puts in the middle of the month, and because of kind of what I'm seeing here. Um, this, I'm a bit conflicted about this because, I mean, obviously this is a bullish descending wedge, or a bullish descending broadening wedge. A lot of words there, but it's a bullish chart pattern. And so um, I didn't, I don't know, I didn't feel very comfortable having these puts when this thing could potentially come back up. Now, the reason why I'm a little hesitant talking about this is because it could also really go down, right? There are a number of catalysts that could go down. If you don't know, I mean, I'm sure you could see from the title, even if you don't know, but USO is, highly tied with oil, right? It's just a fund that trades oil futures. And so, um, if the Ukraine and Russia war gets, brought to a conclusion, that could put downward pressure on the price of oil as the sanctions against Russia are lifted and Russian oil is no longer sanctioned. We could also see downward pressure on the price of oil because of recessionary fears and a stagnating economy, which is, kind of starting to show itself in a bit of the economic numbers. So this is why I'm a little hesitant into, should I have kept my puts? Should I not have? But at this point, I've already sold them, so I'm just dealing with it as it is. My break even is already pretty good. I entered the technical break even is like $72 and somewhere around 50 cents. Yeah, 72.69. And so I have collected enough premium to get this down on an adjusted cost basis all the way down to 69.75. And I'm also including in this break even, I'm also including the profit that I made off of the puts that I sold, because I sold the puts, when the price had dropped. So yeah, so what I'm going to do with my USO position is I have sold one a lot more aggressive covered call here. When I sold it, it wasn't that much money, but it was over $1. Yeah, average credit $1.12. So I got $112 for selling this, and this was very like at the money at the time that I sold it. Um, and I guess at the moment it still is. In the post market on Friday, it started dipping down quite a bit. It was back down to below 70 again, I believe I saw. But yeah, anyways, as of right now, it's still at the money. So if I get assigned on this, I am not I'm not in a bad spot at all. I will still have on, you know, on my adjusted cost basis, I will still have, some gains that I will have. And I will be able to take that money, I've currently got, as we saw here, almost 50% of my portfolio in USO. I can reallocate that to a different position so that I don't have as much in USO as I did before. That was okay when I had the insurance on the position, the put options. But now that I no longer have that, I should probably not put half of my portfolio in one stock. So I sold this 71 call to be a little more aggressive. If I don't get assigned on this, I will continue selling weekly at the money calls on USO until I get assigned, basically, and just rake in the premium. And my other covered call I sold was it was either 72 or 72.50. Yes, 72.50. And when I sold it, it was like $50. So yeah, if I don't get assigned on either one of these, I will collect approximately 160 some dollars on a $14,000 position, which is definitely not bad. That'll be like a little over 1% in 1 week. So that's what I'm doing on USO. On Coca-Cola, I've decided to sell another covered call. Let me just pull up the chart for that. We're kind of traveling sideways on Coca-Cola right now, and we're reaching kind of the top of where we have been. We've been topping out on Coca-Cola for the past few months around 74-ish. So I sold, and also on the RSI, we're getting really close to overbought territory. So I decided to sell a covered call. Worst case scenario, if I get assigned, I'm collecting premium. Since my option expires on the 19th, and I am not, like, this option is not in the money, and it's still got another dollar or two to go. Yeah, basically another couple dollars before it is in the money, before I'm in danger of being assigned. And so on December 1st, there is a Coca-Cola dividend that I will be able to collect. So I'll collect an additional $50 in the upcoming dividend. Plus, currently, I am sitting on quite a capital gain, like even without, my adjusted cost basis taken into account here. Oops, I clicked the call accidentally. So if I click the shares here, we can see what my current total return is. So my current total return on the shares is $488, 7%. So, and that's just right now. Chalk on, or, put on another couple $100 for if I get assigned at the 7,500 or a $75 strike. I will be at almost a 10% capital gain for a position that I've held like 2 months, if even that. So, yeah, I think that's, yeah, there's really no downside here, in my opinion. So that's why I sold the covered call. And yeah. So the next position that I'll go over here is Pfizer. I decided to sell a covered call on this. I'll show you the chart to kind of explain my thinking here. So I've been kind of thinking about Pfizer a little more, and I like the dividends. I don't think the company is going to go bankrupt or anything like that, but some of the other financials kind of make me a little nervous about making this a long-term hold in the position. So I've decided that I will turn this into a position that I'm going to kind of trade on. So I am going to collect the dividend, which will be on the 1st. And then, sorry, just double checking that. Yeah. Okay. Ex-dividend date was in November, but the payment date will be November 1st. I was just getting a little confused there because Coca-Cola's ex-dividend date, I believe, is the 1st of December. So I just saw the 1st of December again. And yeah, anyways, so as you can see, I've identified a triangle here that we're kind of currently trading in. And basically, I sold a covered call above this triangle. So if I get to keep the shares, great. I will continue running covered calls as it makes sense given this setup. If I don't and I get assigned, I will be, I'll still be in the green. I'm currently like in the green on these shares. My technical like my opening cost basis is like $24 and some odd cents. Um, let's see here. I opened the option again. I apologize. Let's go to the shares. And yeah, average cost $24.14. So yeah, that's my plan with Pfizer. I'm basically going to trade off of this setup here. If it breaks to the downside, then maybe then I'll reevaluate, whether I continue holding the position or not. But my current plan is to basically sell covered calls until I get assigned this position, at least since April has been making higher highs and higher lows. So this should, this consolidation here should result in an upward move. But if it doesn't, then you'll hear what I decide to do after that in the next month's update. So yeah, those are what I'm doing with my shares. I'm not doing anything with Clover Health. I'm not going to do covered calls on that currently. And Smithfield Foods, I'm also not doing anything with options on that either. The options market on that is very illiquid. Like there's almost no activity in there, and the spreads are, between the bid and the ask are really wide. So yeah, not interested in trading options on either one of those two at the moment. At least there's premium on Clover Health, but yeah, on Smithfield Foods right now, yeah, that's just illiquid. But anyways, one last position that I'd like to cover before closing off the video here is this NVIDIA put credit spread here. So, as I'm sure you're well aware, NVIDIA has been coming down quite a bit over the past month, along with many other AI-related stocks generally, over the concerns of a bubble. I'm not, like, I agree, things are overvalued right now, but I don't know, this pullback just seems way too obvious. I think there's a very good chance that we shoot back up. Now that's not to mean, or we can definitely go lower in this pullback, right? We had a low volume week with Thanksgiving week just this last week and kind of had like a rebound. I wouldn't be surprised at all if this coming week, we just had a big sell-off. But what happens after that? Do we continue selling off, or do we rebound even further and make an all-time high? That's the question. And I think, in my opinion, it's right. These bubble fears, right? Everyone's talking about them. If the market is going to, seriously correct, I would think it would be over some sort of shock or surprise. Something that people aren't talking about that suddenly, happens and takes place and then catches people off guard. This AI bubble stuff has been something that people have been talking about for quite some time. And the NVIDIA earnings report that was just released not too long ago, like it was good. It was, yeah. So as far as I'm concerned, NVIDIA is on a discount right now. So I have sold a put credit spread. If it goes up from here, great. I made, $50 in premium. And if it goes down below my short put, then I'm okay being assigned. I will sell the long put. I did a put credit spread here because just in case the market really drops and it goes below 170, then I will have some, I will have a long put in which I could sell to recoup some of that loss. Like I'll still be out $250 at least, because that's the difference in the spread. But at least if it goes lower than $170, I will I will capture that downside. So that's why I decided to do the put credit spread instead of just a regular cash secured put. Because I recognize that in the short term, yeah, this could, the market could correct downward, a lot harder. But I think, yeah, I just think at least in the next few months, 2 to 3 months, we're still going to see, in my opinion, um, upward momentum. But we'll see. Maybe I'll be wrong, and I will be, if I get assigned on this, I'll be going into margin. Maybe I'll be in on margin on a stock that's declining. So yeah, I'm not that concerned about it. I think Nvidia is a solid company. I am willing to take the risk of being assigned and going into margin on this stock. So yeah, that is basically what I'm planning on doing in December. Of course, I may decide to do other things during the month, but as of right now, I'm just keeping these updates to a monthly basis. So yeah, thank you for watching, and I will see you in the next video. Have a Merry Christmas if you're celebrating, and I look forward to seeing you at the end of December.